Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. Are you a dividend growth investor? That's what we cover on this channel. If you are new and just stopping by for the first time, I am a dividend growth investor. I do portfolio update videos like this every Sunday morning. You'll see everything that's going on in my portfolio, all the options that I've done, any buys or sells in the portfolio, any changes to the portfolio, no paid Patreon or other site you have to go visit. It doesn't cost you a thing to see what I'm doing here. It's all out in the open, full disclosure on this channel. You'll see that on a weekly basis. I also do a stock pick of the day series Monday through Thursday, where I look at a stock that's pulled back on the day to see if it's presenting any value, and a couple of monthly videos where I cover the dividends paid out for the previous month and the positions I am looking to buy in the month that we are heading into. So if you have not done so, hit that subscribe button down below, hit that thumbs up down below as well, hit the notification bell so you're notified whenever we push any new content out. And join us on this journey to financial freedom. Join the Vested Interest community, building a community of like-minded dividend growth investors so we can share our experiences. Like I said, portfolio updates like this every Sunday. We did add $1,243 in new capital to the portfolio, and there was a lot of activity in the portfolio actually this week. So let's jump in and see what is going on. So we will start out. We did have a bit of a reallocation, and part of that was we had a Bank of America covered call where we had 300 shares. We were running a covered call, if you recall, and we were assigned to those shares last Friday, or those shares were called away last Friday. Bank of America did run up a little bit, so this hit just outside that 27.50, and these 300 shares were called away. Now we took, you'll see here in a moment whenever we cover the options for this week, we took cash from this here, and we did 200 shares of Bank of America in a cash secured put. You'll see that on the next page. And then we took the rest of the funds, this roughly $2,784.39. So it wasn't, technically just 100 shares. It was a little bit more than what would have been the 2,750 would have been 100 shares. So we use a little bit of new capital to run the new options. You'll see that here in the next slide. But we reallocated $2,784.39, and with those funds, you'll see here down below, we picked up 2 shares of CVS Health, ticker CVS. We picked up 4 shares of Enbridge, ticker ENB. CVS is out of the healthcare sector. Enbridge is out of the energy sector. I'm going to go through these a little bit. I don't want this video to be too long, but these are all the positions that we reallocated this $2,750 from the cash that we recurred, or $84. Procter & Gamble, we picked up 2 shares there from ticker PG. This is out of the consumer staple sector. Cisco Corp, ticker SYY, out of the consumer staple sector as well. 10 shares there. Johnson & Johnson, we are still nibbling on this one. Ticker J&J, out of the healthcare sector. 2 more shares there. Nutrien, ticker NTR. This is the out of the material sector, and this is also a Canadian company here, so there are some tax implications here. I always mention that whenever we deal with a foreign company, that you may have some tax implications. You want to make sure you understand those. 4 more shares there. And Cisco Systems, ticker CSCO, 10 more shares of that position. These are all existing positions within the portfolio. We reallocated a little bit of those funds out of the financial sector and spread them out among all these other positions. Now let's jump to the next slide. And here we started options for the week, right? So we didn't do the three contracts for Bank of America. We just did 2, because remember, we reallocated the rest of the funds at $29.50 with a strike date of November 24th, strike price of $29.50. So 2 more contracts. We took the rest of that cash that we didn't reallocate, and we put them into 2 Bank of America cash secured puts. So we have those puts. We received $13.94 in premium for those. And then we did 1 contract for ticker MPW. This is a REIT out of the real estate sector, a $5 strike price. Same thing for Friday. That was this past Friday there, day after Thanksgiving. The market was open the day after Thanksgiving, and we received $29.46 in premium for a total of $43.30. This went right back into the portfolio. Anytime I get any options premium or dividends paid out, it goes right back into the portfolio. In the case of dividends, it goes back in and buys more shares of whatever company paid out Options premium, I just throw in with whatever cash I'm going to spend that week. We didn't have any dividends this week, nothing to report on that front. And now we get into the new capital that we added to the portfolio, $1,243 and a few pennies here, 3 cents, all spent on the 21st. We did all of our activity this week on the 21st. Short weeks like this, I just like to get in early and get everything done. So with the new capital, we continue to add to our Realty Income position, 4 more shares of Realty Income. This is a REIT out of the real estate sector, ticker O at $53.44. This one was one we were loving buying it down in the 40s. It has kind of rebounded a bit, headed back, into the mid 50s. It's still under my cost basis, so I'm going to still continue to nibble on this one. 10 more shares of Enterprise Product Partners, ticker EPD. And we picked up those shares at $26.40. I mentioned last week that I wanted to add a little bit to this. I had not added anything to this. This is out of the energy sector in quite a while. It is above my cost basis, but not egregiously so. So I figured we would add a little bit there. And this is a new position, if you'll notice, ticker KR, the Kroger Company. And this is out of the healthcare sector. We added those 10 shares at $42.97. It closed out the week a little bit higher than that. So again, one that we added to the portfolio. So this is the newest position right now. And not last but not least, we added 10 more shares to Pfizer, ticker PFE, out of the healthcare sector. And this one is just too cheap for me to ignore at $30.13. So these new positions and the new position Kroger, as well as adding to the other positions that were already in the portfolio, added an additional $60.28 in passive income. Well, let's keep on rolling. Now we will run through the sector weights. Communications makes up 9.57% of the portfolio. Consumer discretionary 1.49. Consumer staples 9.06. Energy sitting at 6.80. So this looks quite a bit different than last week because we pulled quite a bit out of the financial sector here. Energy sitting at 6.8%. Financials only makes up 8.3%. I think it was in the 11% last week. So that's where those Bank of America shares got pulled out. And then that was part of the reason we reallocated them around the portfolio. Though we will probably build out the Bank of America position if it pulls back a little bit again. And healthcare, biggest piece of the pie as we add to the J&J position, which I'm going to back off here at some point soon, and the Pfizer position this week. So still the largest piece of the pie here, sitting at healthcare, 17.62%. It is getting up there. I do not want any one sector to be over 20%. So again, at some point, I'm going to have to back off of healthcare and fill out all the rest of the pie here. But for now, we're going to keep nibbling. Pfizer is just so cheap, and Johnson & Johnson, I feel the same way. So maybe we'll run a little over 20 and then back off and then add to other spots, but we'll see. Industrial sitting at 7.95%. Technology makes up 8.01%. Materials is still second place at 13.09%, though it's really tightened up there between them and the REIT sector, real estate sector. Utilities makes up 5.12%, and REITs in real estate sitting at a very close third place here. Second and third place, they're right almost in line with each other. 12.99% for materials. I do not have any ETFs. I consider my overall portfolio my ETF. Let's take a look at my overall portfolio. You can see the sector weights here over to this to the side here on the right of the screen. The percentages match up with the pie, but they also show you the monetary value in each sector as well, how much I have in each sector as well. And here it is, what most of you come to check out and see. Again, right out in the open, you're going to see the positions in the portfolio, everything that I do in the portfolio, buys and sells, whether I'm up or down, in the green, in the red, how much dividends I'm making on an annual basis. So let's run through this. Here is the tickers, all the positions in the portfolio. You saw all the different sector weights there previously. Here are all the different positions. Total shares that I own of each position. Current price as of the close of business on Friday. The market value, how much it's currently worth as of the close of business on Friday. Average share price, that's my average share cost. And what I have into it, my purchase price. Total return, whether I'm up or down. If it's red, I'm in the negative. Same thing here is percent return. So if I'm in the red, I'm in the negative. If I'm in the green, it's in the positive, obviously. What sector the company falls in, whether it's a monthly, semi-annual, or I'm sorry, quarterly, monthly, semi-annual payer. Current dividend yield as of the close of business on Friday. My yield on cost. the portfolio weighting here. On the previous slide, you saw the sector weightings. This is what each position weighting is. And I don't like, let's talk through this one real quick. I don't like any one position to be over 10%. So Johnson & Johnson, like I said, at some point I'm going to back off here because it's at 8.86% of the portfolio, and I don't like any one position to be over 10%. Estimated annual income in this column, payout months, the dividend growth year over year, and where it sits at 15% of its 52-week low. So currently I have 5,609.339 shares total. Market value sitting at $183,589.94. I have $190,547.68 into the position or into the portfolio. I am down $6,977.74, or down 3.66%. It's funny, this keeps shrinking every week. It feels like it was down as low as 9%. I've been as high as 6 or 7% this year. So I don't focus on this number, whether I'm up or down. It matters not to me. It's just part of building a portfolio out over time. Sometimes you're up, sometimes you're down. Just the nature of the beast, but I am not focused on this number. I'm focused on this number over here. Current dividend yield is 4.8%. My yield on cost sitting at 4.629%. And this is really what I focus on: the estimated annual income, the dividends paid out on an annual basis. You can divide that by 4. It's not evenly dividable by 4, but if you wanted to look at it by quarter, you could divide by 4 and say it'd be an average of that, or divide it by 365 if you want to see how much you make a day, or divide it by 52 if you want to know how much you'd make a week. Maybe I'll do a slide that breaks this down. But anyways, this is what I'm focused on, whether I'm up, whether I am down, whether the market's up, whether the market's down, or whether it's floating sideways. I am focused on the estimated annual income, the dividends paid out from all the positions inside the portfolio. Currently sits at $8,821.14. So this is up significantly from last week, even though I only added $60 in new estimated annual income from the new investment. Reallocating the 100 Bank of America, the funds that we received from those 100 Bank of America shares, really brought this up quite a bit. I think a little over $100. So that is very nice. And then the estimated dividend growth, 7.33%. That was part of the reason for adding the Kroger. I needed something. I didn't necessarily need something in the consumer staples sector, but I do like Kroger. I shop at Kroger. I use Kroger. It's where we get our groceries at my house. We get some at Costco as well, but most of our groceries come from Kroger. And I really like the dividend growth on this one, 17.02%. I like the consumer staples, so as a growing dividend, the starting dividend yield is pretty decent at 2.63%. I locked in 2.7 with that first tranche of purchases, and I'm going to build this one out, already up 2.82%, so I hope it goes the other way. Whenever I add a new position, I hate whenever it runs up because I want to really build those out. Williams-Sonoma is an example of this. I have 2 shares, and it has really run up, right? It's at, that's wrong, average share, or yeah. 183. Yeah, it's really up to $183.34. My cost basis is $120. So it really ran up where I wasn't able to build this one out very much. Owens & Corning was another one that I was trying to build out, got to 44 shares, and it really ran up 44.81%. So I hate it when a company runs up like that. I'm hoping Kroger does not do that. But at 15% of its 52-week low, I can buy this all the way up to $48.41. So at $44.17, it still meets that, even though I bought the first 10 shares at $42.96. But that's just the nature of investing. Stocks go up and down. Give yourself a buy-in price, which I liked their buy-in price here at $42.96. Anything under 43, I think, is a steal for Kroger. So even at 44, I don't mind adding to it. I'd like to get it to 100 shares here. But newest position. So right now I'm focused on building out this Kroger here. I want to build out the rest of HVT, but it has really run up as well. It's sitting at $32.90. My cost base is $27.28. I'd like to get this to at least 100 shares, so only 18 more needed here, but it's run up, right? It's up 20.6%. So I feel like every time I add a new position, it runs up before I can get it built out where I want it. Another one, SYY, Cisco. Here I have 75 shares. It's starting to run up. I was, buying it down here in the low 60s, low to mid 60s, and now it's up at 72. So up 8.35% there, even though I just added the position. That's the nature of it, and I think that's why I like the focus on companies that are at their 52-week low or within 15% of their 52-week low. A lot of times whenever they hit that 52-week low, they start to rebound and you're headed in the other direction with a quickness. So it's nice to have a little bit of dry powder. So hopefully I can get Sysco, Kroger, and HVT built out a little bit more to at least 100 shares before they get too ridiculous and I have to back off. But at some point I will back off. That's part of the reason I use this 15% of 52-week low as well. I don't really want to go over that purchase price. Like Kroger, if it runs up over $48.41, I'd back off of it, even if I haven't built a position out. Just like Williams and Sonoma. I've only got 2 shares. I'll wait for it to pull back. If it doesn't pull back in the next couple of years, at some point I might just trim these 2 shares and book the profits. But that's the nature of building out a portfolio. You never know when a stock's going to go on a run, and on the flip side, you never know when a stock's going to drop by 50%. It's like Sibanye-Stillwater or MPW here down 45.95%, and you saw that I've got a cash secured put on this one. I am counting those 100 shares. I believe they were assigned, so I did count that 982 is part of the 100 shares that the cash secured put I put this week on as well. I do not believe the Bank of America hit, so I'll run those 2 cash secured puts again next week and see if they'll hit. 29.75. It was at 29.50, so they're just over that. So I'll make a little bit more in options premium, run these 2 contracts on Bank of America next week and keep running that wheel. All right, getting a little long-winded. Hope you found value in the portfolio update. Again, do these every Sunday. If you are a dividend growth investor, hit that subscribe button down below. Join us on this journey to financial freedom. Hit the comment. Let me know what you bought hit the comment section. Let me know what you bought this week. Did you run any options? Have you done any rebalancing? Do you do any rebalancing? When do you do rebalancing? Let's talk about that for 1 second before we jump out of here. Part of the reason I did that rebalancing on Bank of America, I am actually trying to run out these options for the next 3 weeks so that I can take part of this loss on Bank of America by running these options and covered calls. If I don't reinvest in a Bank of America within 30 days, I can take some of that and book that loss and use it as a tax loss harvest to write off some of the gains that I've made this year in dividends. And sometimes you need to do that. Sometimes it makes sense to do that. I may do that with SBSW, though that one's a monthly one. I might not be able to get back into it for a couple months if I do that. But I might look to do some tax loss harvesting on Sibanye-Stillwater as well. And maybe even MPW, just because it's down so much lower than my cost basis. I could book some of this loss, use it as tax loss harvesting. Look that up if you don't understand what it is. Basically, it says if you book some of these losses, you can offset the gains you've made in dividend income for the year, and then I wouldn't have to pay taxes on those dividends, right? So I am looking at being close to the end of the year. This is the time you want to do it. You have to do it by the end of the year. If you've made 3, 4, 5, 6,000 or more in dividends for the year, you might want to look at some of your positions that you are down, booking those losses. Then don't buy back into that same company for 30 days, and you can do what they call tax loss harvesting to offset some of those gains that you've made for the year. Right, the options premium or dividends that you're paid. If your options do options like I do, that tax loss harvest would help offset some of that short-term capital gains on the options as well. So that's the idea behind tax loss harvesting. I should do a video on that as well, so it stands alone. Drop a comment down below. Let me know if you do any tax loss harvesting in your portfolio, or if I'm getting way too in-depth for some of the newer investors out there. I get it. Look up tax loss harvesting. Read as much as you can about it. Lots of good videos on YouTube about that as well. Well, that is it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have any companies you'd like me to cover in the Stock Pick of the Day series, go ahead and drop that down below as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. Should never invest any amount of comfortable losing. Always do your own research, best to your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.